Hey everyone, Ian King here, editor at Smart Profits Daily with your weekly market insights video. Joining me this week, analyst at Banyan Hill Publishing, Steve Fernandez. Steve, our viewers want to know, when was the last time you went to an ATM?
It's got to have been 6 months to a year. I've had the same cash in my wallet since before COVID started.
Incredible. And that seems to be a reality for many people. We just don't go to the banks anymore because one, we're not using cash and we're ordering more things online, such as groceries or household items. And number two, there was that whole fear for a while, I don't know if you remember, where people were saying that you can transmit the coronavirus via cash, whether that's not true or not. But Steve, this brings up an interesting point because there's a huge demographic shift in the amount of people or baby boomers who use mobile payments versus younger generations. Why don't you walk us through that right now?
Sure. So with the younger generations, it's really been all about convenience. So we're seeing a surge in mobile payments, especially, and that's going to continue and probably creep up into the older generations. There's nothing easier than just taking out your smartphone when you're checking out at a store or swiping your smartwatch. Yeah, the health concerns are obviously one thing, but younger generation and people in general just prefer the convenience aspect.
Yeah, and the research that you looked up says that 25% of boomers have used a smartphone to make a payment in a store, whereas 75% of Gen Z have used a mobile phone to make a payment, 70% of millennials, and Gen X, my generation, at 52%. And when I think of this whole discussion, it really brings me back to this whole idea of what a bank is. And if you think about the 20th century and the 19th century idea of a bank, they built these huge fortresses with Corinthian columns, and you had this big vault in the bank. And it was just psychologically, it felt like if you put your money there, it was safe. And if you visit any city in the country, specifically in the Northeast, they have these old banks that have now been converted into either banquet halls or in some cases condo buildings. But now it seems like the bank is moving from a physical structure to something that you can do online or even have on your phone. What do you think about that, Steve? You think this is a trend that's here to stay?
I think it's here to stay. To be honest with you, with everything moving online, cybersecurity is the number one concern. And that has been the initial, obstacle with this surge in mobile payments. But I think as technology, blockchain continues to grow, we're going to see that fear kind of subside. So I think, people don't really care about, the size of the vault or the security measures in a branch, for example. I think that's more symbolic, like you said, more than anything.
You're a young guy. So, do you remember the financial crisis, or this is way back before you had any idea of what was happening?
I think I was just starting high school. So, I remember maybe seeing a lot of red on CNBC or a news channel, but that was about it. Just a lot of research, looking into it. And obviously, I think that really spurred a lot of distrust in banks.
Yeah. Do you think this impacted your view of banks after that?
I think so. I try to stay away from holding money in banks for various reasons. And, just with all the things that happen with like the mortgage crisis and housing crisis, it is a little off-putting.
Yeah. And I'm sure this is, something similar with a lot of people in your generation where they just don't trust banks, right? I mean, any idea what the percentage is? I think you gave me a stat that equivocated going to a bank with going to a dentist. What was that?
Yeah, I saw that 71% of millennials would rather go to a dentist than a bank. And I think that tells you everything right there.
And so this brings us to the point is that fintech is eating the traditional banking sector. And I want to share this chart with our viewers. It's the ARKF. This is the fintech ETF from Ark Asset Management Group. And it shows the performance of it versus the XLF. That's the bank ETF. And you can see that the XLF has actually dropped in the last year and a half, whereas the fintech ETF has just skyrocketed. And Steve, do you want to just discuss some of the underlying holdings in that ARKF that have really taken off?
Sure. Some of the bigger holdings, Square, PayPal, Zillow Group, basically the new companies that are really growing. So it's no surprise that that ETF has performed so well. I know banks aren't really growing at all. They're actually in a secular decline.
And also banks have all this legacy assets, right? They've got all the real estate they've got to deal with, whereas with Square or PayPal, they don't have any physical infrastructure. It's just an app that sits on your phone. And I think I read recently that it costs Bank of America about $300 to acquire a new customer, whereas Square it costs them a fraction of that. So to add a new customer to an app is a lot cheaper than one of these physical banks to add you as a customer. And I don't know if you have a bank account on one of these old legacy banks, but their technology is just so far behind where Square and PayPal are. It's pretty interesting, huh?
Right. I actually saw a stat. It was something about 75% of like the legacy banks are actually, their primary focus is on visible technological innovation. They want clients to see that. So you can tell that they're a little worried about fintech in general continuing to take share.
Yeah, I think it's too little, too late, though. I mean, I think that like they should have been doing this 20 years ago, and the mobile experience, the online experience for Bank of America or Citigroup is just still so far behind where some of these fintech companies are. The other thing I would add is that I moved to Florida a couple of years ago. When I moved here, I opened up a bank account in one of the regional banks, which I didn't have in New York. And, it was a bank in town, and I liked it. It was kind of, there was the local vibe to it, and I got to know the banker. There was a period where their website was down for 2 weeks. I mean, that is just absolutely unheard of, that you can't access your funds online or send a wire or move money from one account to another without having to go to the bank for 2 weeks. And when that happened, that was it. I was just done with that bank. And I won't mention what the bank is, but it just goes to show you some of these cyber problems that these banks have, because they're not a tech company first. They're basically an old world bank first. And as an investor, why would you ever want to invest in one of these companies? Because these software first banks are just going to eat their market share away. Now, I want to just bring up one other interesting chart, and that's the number of cashless transactions globally. And you found this research from the World Payments Report. Why don't you walk us through it? It looks like a pretty steady growth from 2014 onward.
Right. So steady growth. And with the COVID pandemic, we're seeing a surge. That growth is actually increasing. So I think that's here to stay. I think we're going to see that growth continue until, there's trillions in dollars that fintech can actually penetrate. So I don't see that going away.
Yeah, I agree with you there. So Steve, it's been a really great discussion about the fintech sector. And for those of you, if you like our video, please smash that like button. Feel free to leave us a comment. Let us know, do you still use the old banks, or are you migrating to the new mobile apps or not? For Steve Fernandez and myself, have a great week, everyone.